Hey everyone, I'm Tony with Clarkson Santoro, and this is our weekly real estate update for July 15th. In this weekly series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those numbers mean for you as a homeowner or as someone who is looking for a house that you will love to call home. The current inventory is 114 homes, up from 109 homes last week. The average asking price of those homes was $2,043,000, which is down from last week's average of $2,065,000. 10 homes asking an average of $1,923,000 went pending this week. That is more pending homes than last week's number of 4, and a higher average asking price from last week's $1,715,000. A total of 5 homes sold this week, with an average sales price of $1,561,000. That average price was down from last week's average price of $1,796,000, and the total number of sold homes was the same as the last week, which is 5. Now that we've shared what the market did this week, we also want to look at 6 broader metrics that help us understand the strength and direction of the San Ramon market, and more importantly, should give us some context on how the market may be changing. The first 4 indicators we discussed give us a look at the quantitative numbers, which tell us how the market has been performing recently. The final 2 indicators are more predictive and help us understand where the market might be headed. The first indicator we always look at each week is our active inventory levels. The number of homes on the market has been climbing steadily since May 4th, and this week reached a high for the year of 114 homes. A normal market would have about 50 homes on the market, subject to the time of year. The San Ramon market reached the 100 home mark back on June 22nd, and it has remained fairly steady since then, bouncing between 100 and 110 homes for the last 4 weeks. The average list price of the inventory has remained very consistent over the last 3 months, ranging between $2 and $2.1 million. A clear message that sellers are not making sweeping price reductions in a slowing market, at least not yet. Last week, this indicator received a score of 20, signaling a strong tilt towards a buyer's market, and this week we give this indicator a slightly lower score of 18, reflecting a small move in the favor of a buyer's market. The inventory turnover rate is one of the best gauges to judge the health and strength of the market. The higher the turnover rate, the more it favors a seller's market. A turnover rate of 1 time per month is considered a neutral market sign. Over the last year, the market turnover rate averaged about 2.4 times a month, a reflection of a strong seller's market. But it dropped below 1 on May 21st for the first time since 2019. This chart clearly shows a substantial weakening in the turnover rate. Today, the average turnover improved a little to 0.33 times a month, which is slightly higher than last week's turnover rate of 0.31. This is still a very weak number, and of all our measurements, this is the one that we are most concerned about. Last week, this indicator received a score of 18, leaving it strongly in the buyer's favor. This week, we give this indicator the same score of 18. Next, we examine the amount buyers paid over the asking price, and it is another great barometer of the market's strength and depth, but primarily so in a seller's market. Since May 23rd, we have seen this amount drop from $310,000 over the asking price to today's $42,000, using the 30-day rolling average. This is still a reasonable amount over the asking price, but it is $35,000 lower than last week's number. The absence of bidding wars is driving this number down, and sellers are consequently changing their pricing strategy, and more often than not, placing their homes on the market at a price that aligns with the market value, not expecting multiple offers and overbids. If we look at the more recent 7-day rolling average, this dollar amount over the asking price has fallen to about 1% below the asking price, confirming that most homes are listing and selling very close to their list price. Last week, this indicator received a score of 60. This week, we will give this indicator a lower score of 55. The amount paid over the asking price is just above average, and it is important to keep in mind that these numbers reflect what the market was like 30 days ago, when the house first went into escrow. As this chart shows, our San Ramon sales prices based on the 30-day rolling average have been declining since May 24th, when they hit an average of $2,396,000. This week, the closing price number was $1,932,000. Clearly, prices appear to have peaked in mid-May and they are declining. The current lower average sales price metric has been driven down by the outsized number of lower priced homes, with the higher priced homes sitting longer on the market. This lower average number is not a reflection of the broader market price reduction. Last week we gave this indicator a score of 70, and this week we are lowering the score a little to 65, reflecting that we are experiencing a steady, if slow, decline in property value from the year's high back in May. One of the two predictive indicators we follow is the Invesco QQQ Stock Fund. It tracks the health and market valuation of the high-tech companies. We have watched this indicator drop from a market high of 401 at the beginning of the year to as low as 271 a few weeks ago. This fund has improved back up to the 290s, reflecting a small change in a positive way. As the Silicon Valley economy cools, we will see the effects here in the Tri-Valley, as most of our buyers from the last 2 years came out of the Silicon Valley area. It is our experience that about 80% of the buyers in San Ramon were coming from the high-tech world, and the slowing of their industry is definitely affecting our market. Last week, this indicator received a score of 33, and this week we're leaving that indicator at the same number. The last indicator that we follow are interest rates, which have been climbing since August of 2021, when the rates were only 2.84. 5 weeks ago, rates dramatically jumped up more than 0.5% to 5.75. But rates have settled back down a bit, and this week they are down again to 5.51. A small but welcome improvement. However, it appears from comments made by the Federal Reserve that they intend to continue the long-term trend of increasing rates. The latest inflation number of 9.1% will only reinforce their need to increase rates to combat inflation. Last week, this indicator received a score of 35, leaning toward a weaker market. This week, we gave the indicator the same score of 35. In summary, the most current metrics and indicators show a market that has changed from a strong seller's market to a market that is now a strong buyer's market over the last 8 weeks. Last week, the overall score was 30, and this week we are lowering it a little bit more to 28, primarily because the inventory's growth and slow turnover rate. Some of the market's slowdown is attributable to the summer season, as vacation plans take about a quarter of the market's buyers out of the active looking process. I hope this weekly summary and commentary helped you understand our market better and how it is affecting you. Let us know in the comments down below or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, share it with a friend. Hit the like button and subscribe so that you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.